Breaking economy news. We know the labor market has achieved the Fed's mandate with unemployment at 5%, and now the other half of their mandate, inflation, has reached the Fed's 2% target. This means the Fed funds rate is supposed to be at the Fed's definition of normal, or 3.5%. Seems the very least they can do is hike rates the first time, lift off on December 16th. Inflation at the 2% Fed target? How so, you ask? Reading in the newspapers and on the blogs how dangerously low inflation is. Well, core inflation rose 0.2% for CPI in the month of November. As reported this morning, it has risen 0.2% in each of the last 3 months, September, October, November, and now the year-to-year percent change is 2%. Made it. Core CPI inflation has not been this high since February 2013, 2 months after Bernanke revved up QE to $85 billion per month, and a year before passing the baton on to Yellen. Yes, we know headline CPI inflation is rising just 0.5% year on year, but this is only because crude oil prices tumbled from $100 last year, dragging down gasoline prices, and so the entire CPI index. All of this energy drag will disappear in the January 2016 CPI report due out Friday, February 19. Wait for it. Why are core CPI pressures emerging? Which prices are adding to core inflation? Well, medical care services prices are going up a lot, more than in the Fed's preferred PCE measure of inflation. In CPI, these prices are up 0.4% in November after jumping 0.8% in October. The BLS says 2/3 of the 2% rise in core CPI the last year is due to shelter costs. Medical care costs also are up a lot. Core CPI is running 2% even with prices dropping for clothing, airfares, communication items, and furniture. Net-net, the economy has got some momentum behind it if it can start bringing some heat with more inflation. The labor market is at full employment, and Economics 101 tells you that this eventually leads to price pressures. We got some inflation. Core CPI has hit the Fed's 2% target. It's not dangerously low, and the Fed does not need to tread lightly. If there were any holdouts among Fed officials, today's inflation report should put their concerns to rest. Rate hikes are coming. Bet on it.